Imagine waking up tomorrow. Every bank on earth has vanished. Your salary can't be deposited. ATMs don't work. Your savings are gone. Not stolen, just inaccessible. Businesses stop paying employees. International trade freezes. Even buying groceries becomes surprisingly difficult. It sounds like the plot of a disaster movie. But here's the strange part. For most of human history, banks didn't exist. So how did civilization survive? And what problem were banks actually created to solve? Long before there were bank accounts, there were merchants, farmers, craftsmen, traders, and they all faced one enormous problem. How do you safely store wealth? At first, people didn't even use money. They traded directly: wheat for goats, fish for pottery, salt for cloth. This is what we call barter. It worked until it didn't. Imagine trying to buy a house using 20 chickens, 3 goats, and your neighbor's favorite cow. Not exactly convenient. Eventually, civilizations developed something revolutionary: money. Suddenly, trade became easier. But solving one problem created another. If money has value, where do you keep it? Imagine you're a merchant. You've just sold your goods. You now own enough silver to feed your family for years. Unfortunately, everyone else knows that too. Every journey becomes dangerous. Every night you sleep, you're wondering if someone will steal everything you've worked for. Some people buried their wealth. Others hid it inside walls, under floors, inside pottery, even underground. Which sounds like a good idea, until you forget where you buried it. Oops. Imagine explaining that to your family. Surprise treasure hunt? As trade expanded, another problem emerged. Merchants weren't just carrying money anymore. They were carrying fortunes. Entire caravans moved across deserts, through mountains, across dangerous seas. Every journey was a gamble. Humanity desperately needed a place where wealth could be protected, somewhere people trusted, somewhere secure. But who could possibly convince thousands of strangers to leave behind everything they owned? Surprisingly, the first answer wasn't a bank, it was a temple, and that decision would change human civilization forever. Around 5,000 years ago, between the Tigris and Euphrates rivers, one of the world's earliest civilizations was flourishing. This region was called Mesopotamia, often referred to as the cradle of civilization. Here, cities were growing. Trade was booming, wealth was increasing. And with wealth came a familiar problem. How do you protect it? Surprisingly, people didn't build special buildings for storing money. They already had one: the temple. Temples weren't just places of worship. They were among the strongest, wealthiest, and most respected institutions in the city. Thick walls, permanent guards, religious authority. If there was one place people believed would be safe, it was here. People began leaving valuable goods inside these temple storehouses. Sometimes it was grain, sometimes livestock, sometimes silver, which had already become an important medium of exchange. But simply piling everything into one room wasn't enough. Someone had to keep track of who owned what. And that's where one of history's most important financial innovations appeared: record keeping instead of paper. Mesopotamian scribes wrote on clay tablets. Every deposit, every loan, every repayment could be recorded. In a way, these clay tablets were the world's earliest account statements. No passwords, no apps, just baked clay. Not exactly mobile banking, but something even more remarkable happened. Imagine you stored 10 sacks of grain. The temple noticed another farmer needed grain today, but promised to repay after harvest. So the temple lent some of the stored grain. The borrower returned it later, often with a little extra. Sound familiar? Congratulations! You've just witnessed one of history's earliest examples of lending with interest. It wasn't modern banking. There were no debit cards, no checking accounts, no online transfers. But the essential ideas were beginning to emerge. Safe storage, trusted record keeping, deposits, loans, accountability. Ideas so powerful, they would survive for thousands of years. Think about how revolutionary this was. Instead of carrying everything you owned, you carried proof that you owned it. That's a subtle idea, but it changed history. Because once people trusted a record, they no longer had to move wealth itself every time. Trust became portable. As trade expanded beyond a single city, a new challenge appeared. It wasn't enough to store wealth safely anymore. Merchants now needed a way to move money without physically moving money. And solving that problem would eventually give birth to an entirely new kind of banker. The temple had shown the world how to protect wealth. But centuries later, merchants in medieval Europe would ask a much bigger question. What if you could spend money without carrying any at all? The answer would transform banking forever. The ideas born in Mesopotamia didn't stay there. As civilizations traded with one another, knowledge traveled too. Over the centuries, banking-like practices spread across the ancient world. Every civilization improved the system just a little, and each improvement made commerce easier than ever before. By the time of ancient Greece, trade had become international. But there was a problem. Every city seemed to have its own coins, different weights, different metals, different values. Imagine visiting 10 countries, each with its own currency, except nobody could agree how much any of it was worth. That's where the money changers came in. They exchanged one city's coins for another, verified whether coins were genuine, and, over time, many also accepted deposits and made loans. They weren't banks as we know them today, but they were becoming something very close. Then came Rome. As the Roman Empire expanded, trade stretched across 3 continents. Moving wealth safely became even more important. Roman financial professionals, known as argentari, handled deposits, payments, and lending, helping merchants and citizens conduct business more efficiently. In many ways, they resembled early private bankers. The idea was evolving. Money no longer had to stay under your floorboards. It could exist within trusted records. But then, everything changed. The Western Roman Empire collapsed. Long-distance trade shrank, cities declined, and many sophisticated financial systems disappeared with them. For a time, Europe became a far less connected world. It looked as though banking had taken a giant step backward. Then, centuries later, something remarkable happened. Trade returned. And this time, it came back bigger than ever. Italian city-states became some of the busiest trading hubs on Earth. Merchants were buying silk from Asia, spices from the Middle East, and selling goods all across Europe. There was just one problem. Imagine trying to travel hundreds of miles, carrying thousands of gold coins. Heavy, expensive, easy to steal. It wasn't just inconvenient, it was dangerous. Once again, humanity faced the same question. How do you move wealth without carrying wealth? The solution was brilliant. Instead of transporting gold across Europe, merchants could deposit money with a trusted banking house. In return, they received a written promise, a document instructing another banker in a different city to pay the agreed amount. These bills of exchange dramatically reduced the need to carry large quantities of precious metal over dangerous routes. Think about it. A single piece of paper became safer than a chest full of gold. Not because the paper had value, but because people trusted the institution behind it. Sound familiar? Florence soon became one of Europe's financial capitals. Families built banking businesses that stretched across the continent. Among the most famous were the Medici. Their banking network helped finance trade, supported governments, and influenced politics during the Renaissance. Their story wasn't just about money. It was about information, reputation, and above all, trust. Look at the pattern. Every generation solved one problem. Mesopotamia solved safe storage. Greece helped manage different currencies. Rome expanded financial services. Renaissance Italy transformed how money moved across borders. Banking wasn't invented in a single moment. It evolved, one breakthrough at a time. By now, banking had become far more than a place to store wealth. It had become the invisible infrastructure that powered economies. But one question remains. Why has this idea survived for thousands of years, while countless others disappeared? The answer has less to do with money than with something every civilization depends on: trust. Today, most of us don't think twice about using a bank. We tap a card, transfer money with a phone, receive our salary, or pay a bill in seconds. It's so normal, we rarely stop to ask why any of this works at all. The answer isn't technology, and it isn't money, it's trust. Every step in the story you've just watched was really humanity solving one simple problem. How can strangers trust one another with something valuable? That's the real invention. Think about it. 5,000 years ago, a merchant trusted a temple. 500 years ago, a trader trusted a banker. Today, billions of people trust invisible computer systems. The tools have changed. The idea hasn't. Every single day, trillions of dollars move around the planet. Most of it never exists as physical cash. It's simply numbers, moving between trusted institutions. And that idea began thousands of years ago, with merchants searching for a safer place to store grain and silver. Without banking, modern civilization would look completely different. International trade, mortgages, businesses, salaries, online shopping, even your savings account, all depend on an idea that has been evolving for millennia. Remember the merchant we met at the beginning of this story? He wasn't really carrying gold. He was carrying a problem humanity spent thousands of years solving. Banking wasn't invented in a single day. It evolved, one idea, one civilization, and one innovation at a time. And that journey is still unfolding today. But here's something even more surprising. Banks weren't the financial invention that made ordinary people wealthy. That came later, when a group of merchants in Europe accidentally created something that would reshape the global economy forever: the stock market. And trust me, that story is even stranger. If you enjoyed uncovering the hidden history behind modern finance, you're going to love the next video, which is the story behind the stock market. Subscribe to the Cipher Bureau and join us as we explore the fascinating stories behind the financial world we often take for granted. And before you go, let me know in the comments, what financial invention should we uncover next? Thanks for watching, and I'll see you in the next video.